I'm Brian Walsh, and from Impact Alpha, this is Returns on Investment, a show about impact investing.
For those investors that do have capital to deploy, they want to be part of the response to the crisis, the recovery coming out of the crisis, and ultimately investing in a more resilient system that can better weather the types of shocks we can expect in the future.
That's Amit Bouri, the CEO of the Global Impact Investing Network, the GIIN. Today on the show, Amit speaks with Impact Alpha's David Bank about how impact investors are responding to the coronavirus crisis and how they're thinking about the recovery. Let's jump right into the conversation.
Hi, Amit.
Hi, how are you, David?
Great. Thanks for joining us. I know things are a little bit in tumult, so thank you for making the time.
Oh, thank you as well. I'm really honored to have the opportunity to speak with you today.
Well, we're very keen because you've been taking the I don't know if we can say taking the temperature anymore, but taking the pulse, let's just say, of impact investors and the impact investing community through this COVID crisis, and we're very keen to sort of hear what you're hearing. So maybe just let me leave it as broad as that. What are impact investors telling you these days?
Well, I think this is such an important time for the impact investing community and for a global community that we have, in part because that we are so interdependent and interconnected, and this virus and the ensuing crisis has just underscored the ways in which issues and crises can cross borders. But I also think it's really important to lean into that interconnectedness as part of our response. Just in the last couple of weeks, I've been spending a lot of time connecting with our members and partners all around the world. And for those of you who are not familiar with the GIIN, our global network includes over 30,000 people, and our formal membership network includes over 300 organizations in over 45 countries that are active on 6 continents.
And when you say organizations, you mean investors with putting capital to work in many cases.
That's right. Everything from large global banks, institutional investors, boutique fund managers, philanthropic foundations, and development finance institutions. They're all part of the impact investing ecosystem, though their sources of capital and orientations vary. And I think that diversity is incredibly powerful, particularly in a moment of crisis.
Now, let me just press you a little bit because it seems like there's kind of two dueling narratives, I guess. One is a kind of retrenchment and maybe pulling in of horns. Portfolios have taken a hit. Maybe people are retreating to safe havens, what have you. And then the other is obviously, I think that this is a moment for impact investing and impact investors to step forward. I mean, what sense are you getting from your members and your community?
I'm finding that both are happening at the same time, and I'll explain what I mean. I think, given the speed with which this crisis has unfolded, it has led to a very natural sense of regrouping. People are worried about very basic needs, health, safety, and shelter, for their families and also, for their teams. And so there's a natural focus on just business continuity and understanding the impacts of the multiple facets of this crisis. The health crisis, the financial crisis, as well as the psychological and kind of confidence crisis that's unfolding from this. But as investors are regrouping and just taking stock of the implications, I do think we'll continue to see an evolution in focus to think about how do we invest going forward in this environment. And clearly, this crisis has laid bare some of the issues with our system. Inequality is playing a huge role in the way that this crisis is felt, and that will only increase as it spreads more to emerging markets that have much weaker health systems. And so for impact investors who are focused on putting capital to work to have a positive impact on the world, I think this is a real moment of leadership. But I think that we're transitioning into that leadership orientation as people just do the basic regrouping and making sure their people and their assets are safe and well understood.
There's always a truism, which is, it's sometimes too early to mobilize for the future, but then by the time it's not too early, it's too late. I mean, are people and investors getting themselves organized, and how for the next stage?
Well, I think what we're seeing is, this takes very different shape in different parts of the world. So, for example, some of our colleagues in India are largely experiencing a capital crunch, cash flow issue that just as they've locked down that country. In parts of Africa, where the disease at least is, has been less prevalent, what we have seen is just the impacts of external markets on African economies and businesses. Less access to capital, and those that are dependent on global supply chains are certainly feeling the pinch from this dynamic. And I think that this will be an evolving situation as it unfolds. But one thing that is building in our community, and I think the GIIN plays an important role in helping to harness this energy, is that for those investors that do have capital to deploy, they want to be part of the response to the crisis, the recovery coming out of the crisis, and ultimately investing in a more resilient system that can better weather the types of shocks we can expect in the future.
Well, let's take them sort of piece by piece because I think those are sort of the three buckets. I mean, in the first, just the response. I know we've done a couple pieces with Open Road Alliance, which has been working for a long time, very much pre-crisis, to help enterprises bridge these what they call OMG moments, whether that's the loss of a certain supplier or a funding round that doesn't quite come through in time or what have you, and helping them get over a temporary gap. That kind of bridge loan, low interest and flexible and sort of very responsive to the immediate needs of companies. That's kind of what everybody needs now. I mean, it's a kind of global OMG moment. I know you've been working on that kind of relief, immediate relief, as you said, cash and liquidity for folks that just need to keep the doors open.
Yeah, I think that I think about the ways that people can play a role in the response in two buckets. I think the bigger one is just dealing with the financial impacts of this crisis, and that is that many companies and certainly nonprofits are going to really feel the pinch of revenues in the near term, and also just issues related to their productivity. If they can't get their people working, then they're unable to produce products and services, and obviously demand is heavily affected in this environment. And so many investors all around the world are thinking about how they can adjust terms and possibly provide additional financing to weather this storm. And that can take the form of bridge loans. It could take the other forms as well. But I think that that's something that I'm hearing very consistently all around the world from our community. That is globally top of mind for impact investors. And as there is a crunch both in access to capital, but also just to meet near-term cash flow issues, it's a real issue that investors can play a role in addressing. The other category is on the health crisis itself. Now, obviously, this is a public health crisis, and the lead on the response will be the public health systems. And so we're seeing government taking the lead and trying to provide access to healthcare, everything from diagnostic to therapeutics, and ultimately in vaccine development. But there are going to be some targeted areas where impact investment capital is needed that can help for example, accelerate the development of like testing production in other parts of the world. It might be able to help increase access to a variety of kind of therapeutic opportunities. And then it can also play a role in helping to address point solutions that are both part of the initial response and also help for longer term systems, things like telemedicine and other services that can increase access at a time when the health systems are under an immense amount of pressure.
Now, in some cases, we've been hearing from some investment fund managers that, in fact, companies that they had backed for other reasons turn out to be actually well positioned. Whether that, as you said, that's in supplies, whether that's personal hygiene or other kinds of things that are now in demand. Or as you said, testing and biotech kind of solutions. I mean, there are areas where impact investors have been invested in that are now turning out to be quite useful.
Yeah, I think that's right, and I do think that there are many things that are emerging as this crisis unfolds, and one of them, for example, is like an increased awareness of our food systems, and how do we actually make sure that people get access to healthy foods, and that's been a huge byproduct of the conversation in places like New York, where they've closed schools, but also in many other parts of the world where that's happened, where the school system is a way of getting healthy foods to low-income populations. And we've even heard this from some of our members in Europe who have found that while some of their investments in things like financial inclusion are under an immense amount of pressure, some of their investments in sustainable agriculture and food are actually performing quite well in this environment. And it does really illustrate the need for us to have a kind of a broad-based and resilient system that can help keep people healthy and productive, at times of when we're experiencing booms and busts in the economic cycles.
Well, that leads to your second bucket, which is how are folks continuing to invest? Whether that's in the recovery or just as we come out of this, like, is money and capital actually going to be flowing to those kind of enterprises, or are people just out of cash and out of capital, and a lot of those good ideas may die on the vine through, in effect, no fault of their own?
Well, I think that it'll certainly depend on the investor, but I do think that there are a lot of investors who have raised funds that they need to deploy, and I think that is an opportunity where impact investors now can play a very important role in not only transactions that help finance companies, that can play a really positive role in helping to get people to work in high quality jobs and increase access to basic needs, things like food and health, housing, and finance. I also think that it is important to think about this in the context of, like, how are we shaping the system that emerges from this crisis? In the moment we're in now, where a lot of people are just in a moment of shock and trying to contend with the world that's kind of so volatile and tumultuous in this moment, I think it's hard to think about the long game for most folks, very understandably. But as we start to stabilize, I think that will leave a lot more room and headspace and discussion for what is the world that we're trying to invest in now. We're coming out of a 10-year kind of recovery from the great financial crisis that led to huge booms in the stock market, lots of GDP growth, but also an incredibly uneven recovery that has exacerbated inequality, and certainly has not done enough to address climate change. And so, as we're thinking about the next recovery, and we're in 2020, the SDGs have a target set for 2030, so we've got a decade ahead of us. And what are we going to shape for the next decade? And how do we need to build a system that can actually achieve the SDGs, meet the goals of the Paris Climate Accord, and get us to a more just, inclusive, and sustainable society that's more resilient when you experience crises like this?
Well, I want to get to that broader systemic and societal system that you're talking about, but let me press you a little bit on impact investing's own system, as it were. So
Hmm.
the GIIN has admirably kind of spanned what has been a kind of running dialogue over at least my time in the field between the quote market rate investors who say, we don't want to take a discount. There's no trade-offs. We want to invest for impact, but we want to get commercial or market rate returns on the one hand. And then on the other hand, a kind of set of what are now being called catalytic investors who say, no, there are market gaps and there's market failures, and there's ways in which more flexible capital, whether that's longer term or higher risk or what have you, can play a role in kind of creating new marketplaces, new structures that over time may mature out of the need for any kind of subsidy, but that need to be sort of nurtured along. And in the meantime, we're going to take a concession on our return. So there was the concessionary crowd and the market rate crowd. It seems to me, just on the face of it, the whole notion of market rate has taken a big hit. What is market rate in this market?
Yeah, I think that's right. I mean, I think there will be a lot of soul searching around what is the actual market rate, and I think I was speaking to an investor from Singapore last fall, and a U.S. family office in a conversation where they were talking about for a diversified portfolio at scale, what are the actual returns that you can expect? And one of the things that came out from the conversation is that so this is late 2019, they just hit the point where their 10-year backward looking assessment of their performance did not include any type of recession. So it was not a. It was just coming out of the great financial crisis, which meant that their numbers looked fantastic. Whereas if their numbers had included 2007, 2006, or before, it would have been a much more mixed picture. And I think that has led to a bit of a distancing between a longer term view on what market rate performance looks like, because we had this decade where we didn't have any real trough kind of factoring into our the look at performance. And so I think looking ahead, I do think there will be a lot of questions about what is market rate and what we can expect. And I also think there will be there's a real opening for a conversation about how do we think about long-term performance, and how do we think about I believe that if you think about the long term, you cannot avoid issues of social and environmental impact. Because climate change in the long term will have a massive effect on the financial performance of markets. So will inequality and the ability to have sustainable and inclusive societies. And so my hope is that as we get out of the shock of this crisis, that we really have a very constructive and active discussion about how we are building a better system coming out of this.
Well, let me just take you to the other side of that coin, which was the catalytic capital part. And in some level now, we're seeing massive government spending, in some sense to target sectors that are important to restart economies that have had been shut down, to put capital into the hands of individuals, but also companies. I mean, at some level, kind of all capital is catalytic capital now, with intentional policy outcomes attached to it. Is there anything that the catalytic investors in the impact investing community can add to that? To the design of those structures?
Yeah, I think the significance of those investors deploying catalytic capital will grow massively in this time of crisis, rolling through the response to the recovery and beyond. I do think that what we will be looking at, kind of coming out of this, the near term, is a need to really rebuild the economy, to get people back to work, get them to work in high quality jobs, and also to really help address access to basic needs. And so I do think that there's a big role for government-backed institutions like development finance organizations and other types of mechanisms that may be set up as a policy response, to the situation. I think that the role of CDFIs is really important. They have spent decades honing their skills and deploying capital to vulnerable communities. And vulnerable communities will really be hit hard by this crisis. I mean, they already are, and so I think that both those opportunities plus the need to use catalytic capital to leverage in more commercial capital will be incredibly important looking forward. So I think this is a real leadership moment for catalytic capital investors.
You've talked about the broader system change required. I mean, even before this crisis, there was a lot of talk and initiatives spinning up of reinventing capitalism, reimagining capitalism, resetting capitalism, new capitalism, capitalism 2.0. It kind of was in the air, pre-COVID. What does it mean, post-COVID, or maybe I don't know when we get to be post-COVID, but during COVID?
Yeah, I think this is something that's been top of mind for the GIIN ever since we worked on our market roadmap. And I know we've been really privileged to have a partnership with Impact Alpha, on that project. We, just a couple of years ago when we were starting that work, we're really asking ourselves, what is the future for impact investing? And quickly came to realize that, by every measure we could imagine from a market's evolution, impact investing had been a great success. more capital, more investors, more diverse, more geographically distributed, and so on and so forth. But when you zoom out and look at big systemic issues like climate change and inequality, it was hard to feel successful. And ultimately, what we had to ask ourselves as a community was, what does it mean to be quote unquote successful if the overall system is failing? And so, in our view, impact investing has to be about more than just growing the impact investing market, but really our end game is on building a more sustainable and inclusive financial system, where impact becomes part of all investing. Now that was very top of mind from coming over the past couple of years. It's just emerged in many different venues. Everything from the Business Roundtable to the World Economic Forum, with billionaires in finance and in tech talking about how we need to change capitalism, and to the point where you would think that this was just obvious to everyone. I think as a result of this crisis, that conversation continues, but I do think it ramps up with a much greater degree of urgency, because I think we are seeing the downsides of having an unequal society. And I think we'll also see some of the impacts it has on our ability to make headway on issues like addressing climate change that are so systemic and so fundamental.
Let's take the two you mentioned, both climate change and social inequality or income inequality, which pre-crisis, those were the two systemic risks that were called out most clearly. And the climate change one is interesting. And as you know, the carbon emissions and oil consumption and whatnot are very much down as a result of this. There's a sort of growing at least stream of thought that says, why would we restart the very fossil fuel based system that had taken us to the brink of yet other disasters when we've had this sort of, in a sense, gift, if you want to think of it that way, of a carbon reduction that nobody thought was possible. So the climate case is fascinating and important, but the one that's, I think, tougher and that I would love to get your thoughts on are the social inequality case, because as you said, the crisis is sort of exposing the fractures and the fissures in society along wealth and inequality lines, but it's not clear to me that it has a kind of obvious next step to repair those in the same way that the climate case, maybe like, oh, let's just make the transition to renewables. What's the analogy on the social side?
Mm-hmm. Yeah, and starting with the climate change issue, obviously carbon emissions are down because of the reduced activity, that we're all experiencing, and I do think it'll be still a big challenge to make sure climate change is front and center. I imagine the recovery, there will be some who are pushing an agenda that says we can't afford to worry about things like energy efficiency. We just have to get people back to work, and in an unconstrained way. And similarly, climate-related projects, whether it's big wind farms in the U.S. or Europe, or if it's solar projects in East Africa or India, they will still need access to capital. And in an environment where we are, have a capital crunch, those businesses will also have the same challenges that we experience in other parts of the economy. So for impact investors who are focused on climate, there will be a lot of work to do to shape the way that we come out of this crisis. On the social equity piece, I think that in the news, well beyond the impact investing conversation, there's a lot of discussion about things right now about like worker rights, about who really drives the economy and keeps it going, and some really fundamental debates about just basic kind of access to things like sick leave, healthcare, family medical leave, and others that there have been advocates working on for years, and all of a sudden those issues are brought to the forefront in a very powerful, visceral, and universal way, where they're getting a much more attention. And I do think that will lead us to a much bigger conversation. Actually, I think it already has, about what is the role of business and capital relative to society and the planet, and how do we actually establish a new harmony for how those relate to one another. And I think it's important, you can count on the GIIN for playing a role in helping to translate that from a conceptual conversation to one that is much more tactical, about how we actually shape business and investment, to realize that kind of broad vision, for a world that's much more harmonious.
I get what you're saying, but I'm not sure that the investor world has fully grokked what doing what you said means in terms of its own prerogatives, right? I mean, that's what we got to track, right?
Well, I really think about this on two levels. I think one is, what's the role of impact investing in this recovery, and what do impact investors have to bring to it? And then the other is a much broader question about whose capital is being invested in, and who has the wealth and resources in our society. The role of impact investors in this recovery, I think, is critical, because as we're thinking about a broader shift in the way that capitalism works, we have a community of investors who've been putting capital to work, with a conviction that money has a role to play that's much broader than just making more money. And specifically in trying to drive positive impact across a range of issues, whether it's things like addressing gender equality, including vulnerable populations, and work across sectors like finance, ag, housing, and so on. And so I think that discipline is incredibly important to amplify as we talk about how we want investing to work in the future, and how we want capital to flow, and what we want that capital to be invested in. But then I think you're also asking a broader question about like who has the capital and who doesn't. And I do think that one thing that we often overlook and we underutilize, this big opportunity as a community, is the role of things like pension funds and retirement accounts and others, where we have, the capital of ordinary folks, that's pooled together in these massive pools that have a huge amount of influence. And yet we oftentimes will focus on the professional investment staff of the pension fund, and we don't do as good of a job as a community engaging the actual pensioners themselves. And I think that part of our role, and part of our opportunity going forward, is to make a much broader and more inclusive conversation about what the role of capital is in society. Because there are a lot of assets that are being held by ordinary folks and retirement and savings accounts, that when you add it together, are incredibly influential, in the investment and capital markets. And I think really trying to focus on, how we engage a much broader set of folks who are not professional investors, but who absolutely want their money to be invested, in a better world, for themselves and their future generations, and actually have influence over a tremendous amount of assets.
Well, Amit will be tracking with you and following your work and working with you on all that. So we very much thank you for joining us today, and we'll be talking again soon. Thank you.
Thank you so much. I really appreciate it.
That's going to do it for this special episode of Returns on Investment. You can read more about the coronavirus response and recovery and impact investing at impactalpha.com. Check out Impact Alpha's new weekly podcast, Impact Briefing, wherever you subscribe to podcasts. And if you just can't get enough, go to impactalpha.com/subscribe and use code BRIEFING50 to get half off your subscription price. You'll get access to Impact Alpha's deal flow, job postings, and subscriber-only calls and events. Thanks again to Amit Bouri and to David Bank. And thanks as always to our producer, Isaac Silk, who also wrote the theme song. I'm Brian Walsh, head of impact at the fintech company Liquidnet. Thanks so much for listening. We'll see you, in some sense of the word, next time. And remember, we're all in this together.